Hey traders, my name is Rainer and welcome back. So today is actually Vesak Day in Singapore, and for most of you out there who are currently residing in Singapore, I would say happy Vesak Day. It's a long weekend, enjoy it. And for the rest of you out there, right, from the US, the UK, and everywhere else, life goes on. Business is as usual. So this week again, there is the weekly market analysis, and this week I'll look to cover the most important question in trading. Well, at least the most important question for me. And I find that this question keeps me objective when I'm trading the markets. It helps protect my downside and is what allows me to always, survive in the bad times in the markets. So what is this one question, which I feel is the most important in trading? So I'll tell you all about it in this week's video, and I'll see you there. Okay, so what is the question that I feel is the most important in trading? And this question is actually very simple. It's only two words. And these are the two words. What if? I always ask myself, what if I'm wrong? What if the market goes against me? This question is what will keep you in the game for a long, long time. What if? How do I actually use this question in my trading? Let me show you how. So just recap. Last week I said I was bullish on the dollar yen. In fact, I said that for quite some time now, because we said that, look at the price action on the weekly chart of dollar yen. You look at this strong impulse move. Then you notice that dollar yen have the tendency to actually go to sleep, or I would say go into a consolidation for quite a period of time. Then we saw this over here, this consolidation. Then it break out higher once more, but it's pretty weak if you ask me. Then it went to sleep for quite a long period of time. I would say about 6 to 9 months. Then finally, in another decisive breakout, we had this pullback. We had another strong rally towards the upside. And what happened over the last few months was it went to sleep once more. You're sleeping in this consolidation. So you can see this is the historical tendency of dollar yen from the weekly perspective. So I was actually bullish all along. I was just waiting for the trigger to get me onto the bull side of the market. And I got this trigger this week on the daily chart, because I said on the daily chart, look at the price action, is that we have this resistance coming up here. But notice higher highs here, here, and here, coming up into key resistance. So it's telling you that the bulls are in control, right? The bears are unable to push price down lower. And in fact, the bulls keep stepping up at higher prices, and higher prices. That's why we see this series of higher lows over here. And finally, this week what we had was a breakout towards the upside. So I got long. I got long with a buy stop order above this high over here. But now, it does not matter whether I'm in the money right now or I'm out of the money. But the key thing is, how do I use the earlier question I taught you guys in my trading? What if? So I had my buy stop order in the market, but at the back of my mind, let me clear these lines first. At the back of my mind, I was always prepared to be wrong. I was prepared to get out of the trade should it go against me. So at the back of my mind, I was thinking, what if I'm wrong? Did you feel me? What if you are wrong in your trading? I can tell you, no trading system in the world is going to be 100% hit rate. For me, I'm about 30 to 35%. So what if I'm wrong? Because I'm wrong most of the time. So what if I'm wrong? Where will I get out of the trade? So I had a stop loss of 2 ATR, which was somewhere around here. This was my stop loss. So I know ahead of time, before my trade was even triggered, where I was going to get out if I'm wrong. What if I'm wrong? So this was a level where I was prepared to cut the trade and bail out if the market proved me wrong. Because, like I've said earlier, what if you're wrong? Because in trading, you are going to be wrong many, many, many times. And it makes no sense to assume that every trade you put on is going to be a winning trade. Because when you have that mindset, you will tend to neglect your risk management. And when you neglect your risk management, it is a recipe for disaster. You will blow up your trading account. However, look at it from my perspective. This question, what if I'm wrong? By having this question at the back of my head, it does two things. Two very important things, which is critical to your success as a trader. The first thing is this. The moment you ask yourself, what if you're wrong, you will always have a stop loss. Because you know that when you are wrong, the stop loss will get you off the trade to protect further losses from incurring, right? To prevent further losses from incurring. And the second thing it does is it will allow you to play defensive. Defensive, what do I mean by defensive? Alright? You will only risk a fraction of your equity on each trade. Because you know that what if you're wrong? You had better not risk your entire eggs in one basket. Because you know that you could actually be wrong. So you only risk perhaps a 1% on this trade, a 1% on the other trade, 1% on the short euro dollar, 1% on long gold. You will be very careful with the amount you're risking. So this is what this question will do for you. It will always make sure that you have a stop loss and always to play great defense by risking a fraction of your equity on each trade. And again, the question is very simple. What if? What if you're wrong? So let's look at another example. Let's talk about, I would say, a copper trade. I believe we talked about copper sometime. Let's see, where's copper? This is copper. Alright. So I think a few weeks ago I mentioned that copper came to a key level, which is over here. Coincide with this previous support broken, now turn resistance. So, and copper was also at this 50 EMA. So I said, we have an opportunity to get short. Opportunity to get short, and your stop loss could jolly well be above this swing high over here. And now, look at the market. The market went in our favor, right? It's trading over here right now. How can you actually use the earlier question to your advantage once more? Now you are in the money, and you ask yourself, what if? Now you're no longer concerned with what if price hits your initial stop loss. Now your concern should be, what if price goes against you? What if price goes against me? Right? Say for example, there's no reason why price couldn't retrace all the way back into your entry price level, and perhaps even taking out your stops over here. What if price does that? What are you going to do as a trader? Will you be trailing your stops? Will you look to take half profits at a certain key level? Or will you look to take all your profits right now, since there's a possibility that price is, bouncing off this trend line, this upward trend line? What will you do? What if price retraces? What if price goes further in your favor? Can you see how this question is so dynamic? It makes you think as the trade progresses, not just the moment you put on the trade. It is a key question that you have to be constantly asking yourself the moment you put on a trade. Say for example, right now I'm short copper. What if price goes against me? It goes against me back towards my entry. What will I do? Will I leave my original stop loss at its original location? Or would I shift my stop loss to break even? Or will I trail my profits? Since right now, price has gone quite a bit in my favor over here. Will I trail my profits? So can you see that how that question leads me to have different options in my trading onto what I can possibly do? And all this will be decided by your trading plan all ahead of time. You don't want to be making such decisions when you're in the heat of battle, when markets are currently traded right now, when you have money on the line. You do not want to make these decisions because it tends to be suboptimal when your emotions are actually in play. You want to plan all this way ahead of time. That's why we have a trading plan that tells you what to do. If price does this, I'll do this. If price do that, I'll do this. So it's very objective. It keeps your emotions out in play. And this question, what if, is key. What if? So now let's talk about another trade, right? I think natural gas. This was a trade I posted out in my Facebook group. I said that, let me explain why I think, I took the shot. So on the weekly chart, you see, natural gas is in a downtrend. It's in a very clear downtrend, right? We have lower highs here, and the recent one here, and the most recent one here. So price is clearly in the downtrend. And on the daily chart, I saw this. There was a resistance over here. In fact, it's a zone if you ask me, this resistance zone. So what happened last week or last couple of weeks back was price came into this zone and it formed this bearish pin bar out of the resistance level. So I like this setup because of the fact that it took out the high of over here and over here. So those traders who put their stop loss above this high are probably stopped out already. And the thing is that after taking out the stops, which traders thought is a legitimate breakout towards the upside, price then closed lower for the day, forming this bearish pin bar. So can you see how the story actually unfolds together, right? We have the trend with us. We have the traders who traded the breakout towards the upside and got stopped up because, price after that did a false breakout towards the downside. So I took the shot. And right now you can see price is approaching this key multi-year lows over here. So now I have the same question once more. What if? what if price retraces all the way back up towards my entry? What will I do? Will my stop loss be at its original location? Will I shift it to break even? Will I trail my stops? Will I look to take some profits off the table? Because of this simple question, what if price does retrace? Well, another possibility could be this. What if price reaches this key support area over here? What will I do? Again, you see how these questions have a lot of implications as the trade progresses along. What if? But if you ask me, the most important aspect of this question is always admit to yourself that you could be wrong. And the moment that you admit that you can be wrong, it will cause you to be defensive, and you will always have a stop loss in the market. So I hope this question of what if does open up to a variety of further options that you have when you're trading the markets. Trading the markets isn't as static as what you think, right? Whereby you just put an entry price, you put a stop loss, and you put a take profit target somewhere in the future ahead. Because what if the market goes against you? What will you do? Will you be, adhering to your original stop loss? Will you be shifting your stop loss? There's a lot of things that you can do while your trade is in progress. And the key thing to know what you will do ahead of time is to always have your trading plan in front of you. Something that you have developed and know that you have an edge in the markets. Develop it, follow the rules religiously, and trade your plan. You do not want to be making suboptimal decisions when you have money on the line, because chances are you will make decisions that are detrimental to your trading account. Because let's face it, let me give you an example that I see it happening to a lot of traders out there. Let's say, for example, they got short at this pin bar over here, and their initial plan is, say, for example, to take all their profits at this swing support area, right? It's a key area, multi-year lows. So trade is right now going in their favor. Then they're, alright man, I'm rolling. Money's coming in. Alright, next week the market opens, and what happens is this. Price start retracing up higher. They start panicking, they see their profits evaporate. Right, initial, perhaps they have $1,000 in profits. Right now, the market has evaporated their profits, and right now they're only up about 400. They get panicked, they get scared. What would they do? I can tell you, most traders will just take the $400 and move on. When initially their trading plan is to take at this support over here. So can you see that because of their emotions that came into play, they took this $400 over here. But there's a possibility that, price could actually come back lower, hitting that original take profit level and giving them perhaps $2,000 instead. Had they followed their plan, they will be up $2,000. But because of the fact that they did not follow their plan, they decided, to exit their trade based on their emotions, based on the fact that the markets are going against them, they bail out with a $400 profit. So can you see that, by behaving in a way which is at the spur of the moment, is usually more harm than good in the long run. So I'll say, if you have a trading plan, follow it religiously. And only by following your trading plan religiously, you will know whether you have an edge in the markets. You will know whether the plan makes money in the long run. But because of the fact that, you are just acting based on your emotions, based on the short-term moment of what you're feeling, you will never ever know whether whatever you're doing has an edge in the markets. So this is another point that I would like to, point out to you guys, and hopefully you boys and girls can actually learn something from it. So that's all I have for you guys for this week's market analysis. I know it's quite a handful. First we talk about what if, right? The most important question in trading. Then we talk about following your trading plan religiously to know whether you have an edge in the markets. So these two things is the key takeaway for this week. Hope you guys enjoyed it. And as usual, if you have any comments, feel free to leave it below. And I'll talk to you soon. Wish you guys good luck and good trading. I'll catch you soon.